Hi guys, and welcome to a new video. So my name's Tanzin. I'm one of the traders at Vertex Investing along with Ben, and today I'm going to show you the strategy that I used to help pass the FTMO. Now this strategy is a completely rule-based strategy, and it is more of a strategy that sort of supports my style of trading as a mechanical trader. However, this is a strategy that me and Ben have sort of tweaked and come up with to try and make it as effective as possible. So essentially what we need is 3 EMAs. So the first EMA, we need the 8 EMA, and I've made mine as red. It's up to you what colors you want to do, but make sure you pick the colors that you know what they are. So that's my 8 EMA. The next one we need 21, as you can see here, that's orange for me. And the last one is 13. This one isn't overly important, but I'll explain why we need it. So what we need is, essentially the concept is, if the 8 EMA is below the 21, we're looking for sells. If the 8 EMA is above the 21 EMA, then we're looking for buys. So in this case, so I'll look at this specific example here. We are looking for sells because we've got this clear crossover and it's happened and it's going down. Okay, and the reason why we want the 13 EMA is because we want this clear spread and this clear fanning going on here. Alright, so now we're going to look for our entry. So we'll go down to the 4 hourly and let's have a look. Okay, now we want the 4 hourly to match our daily, so we still want this clear spread to go on and we want it to show a sell. Okay, so that's our second confirmation. Now we go to our entry time frame, which is the hourly, and now we look for our entry. So as you can see, there's a lot more crossovers happening in the hourly, which is why we want confirmation from the daily and confirmation from the hourly to tell us what the overall trend and move is. Now for our entry, essentially what we look for is a trigger bar. So our trigger bar is a candle that comes back and retraces and it touches the 8 EMA. Now if it touches the 13 EMA, it's not an issue. That's perfectly fine, it still counts as a trigger bar. However, if it touches the 21 EMA, the trade is invalid and we delete the order. So for example, here, so say this would be a trigger bar here, it's not touched 21 EMA, our entry point would be somewhere below here, and then we got this candle which touches and breaks the 21 EMA. We would delete the order completely and then wait for our next trigger bar to happen, and he obviously doesn't and he carries on, which is why we delete the order when this 21 EMA is broken. This is a very good example because it shows that obviously there was a bullish move at that point. Anyway, so we go back to our entry point here. So we found our trigger bar, which is here. Our stop loss is going to be 3 pips above your trigger bar, so 3 pips above here, so it's 40, and we are going to put our entry point 3 pips below the lowest of the previous 5 candles. So say if I go, let's go to this candle here, for example. Did I just do that? There we go. So I want, bear with me, let's go back, I want this candle. Okay, so say that's our trigger bar. Okay, our entry point is going to be the lowest of the previous 5. So 1, 2, 3, 4, 5. Our lowest is this candle. Our lowest is this candle. So our entry point is going to be 3 pips below this candle. 3 pips below this. It's 94. Okay, and that's literally it. And then we let the trade play out. See if it triggers. So it's triggered here. And if this is one that we sent out this morning actually. Okay, and now the trade is still running. So our entry point is obviously going to be a sell stop from this entry, and we're just going to let it run. Now in terms of your exit strategy, so exiting a trade is a key part obviously. So let's go to an old let me find an old setup for you. Let's go back to where should we go? Okay, let's go back to here. Okay, so we've got our trigger bar, which is here. So we're going to place our order. So it's going to be 3 pips below the lowest of the previous 5. So 1, 2, 3, 4, 5. Lowest is this one. So our entry point is going to be just below here. And our stop loss is going to be 3 pips above our trigger bar, which is about there. So also at 92 pip stop loss. Now all we have to do is let the trade play out and let it trigger. So it triggers now, and all we have to do is just let it run. Now when this happens, so I'll show you how I move my stop loss. It depends on what your exit strategy is. I'll let this play out actually first, and then I'll show you what we would do. Okay, so once you get a break, what I look for is a clear move into profit. So at the minute it is sitting at 121 pips. So in terms of our stop loss and when to move it to entry, I move it to entry when we get 3 hourly candles. So I like to trail my stop loss after each hourly candle. It's up to you if you want to do it this way. It does preserve capital, but I tend to move my stop loss first when we hit 2%. So 2% we've reached about here. So our stop loss is going to be at entry. Okay, now this trade is running risk free. So now we're going to look at how to trail our stop loss. So we're going to let this trade run. Okay, so now we've moved it, our stop loss to entry. Now what I look for then is I look for the highest. If we're selling, I look for the highest of the recent 3 candles. So for example, from moving our stop loss, which is around this candle, we've got these 3 candles. Our stop loss would have been moved to here. It would have been the three pips above the highest of the previous 3 candles. So say for example, so say 1, 2, 3. Say when the prices are at this candle, I would have moved my stop loss after this candle closed above the highest of the previous 3 candles. So that's how I would have moved my stop loss. So we would have secured just under 2% there, because it would have stopped us out on this wick. Now annoyingly, obviously this did come back, hit our stop profit, and then went straight back into profit. But I'd rather take that than take a break, than to take a break even or a stop loss. Obviously a break even is not really a massive issue because you are preserving capital, and that's the main thing, but it can be a little bit frustrating. However, it's probably the best way to manage your trades. Alternatively, what you can do is let the trade play on, let it run, and your exit would be when the 8 EMA comes back and crosses. So it hasn't crossed just yet. It still hasn't crossed. It's still going. I'm not sure when this crosses actually. I've not watched this one out there. So we would have stopped. We would have exited the trade around here. So that's 163 pips. So yeah, you can just wait for the crossover to happen and then exit the trade, or you can just trail your stop loss after every 3 candles. So for example, these 3, so you've got 1, 2, 3, our stop loss we can move to here, but because it was already at entry, I didn't really move it. Let's move this out of the way. I didn't really move it. I left it. Then we've got the next 3 candles, so 1, 2, 3, our stop loss will still be there. 1, 2, 3, and then our stop loss was moved to here, and that's when we got stopped out. Obviously if we didn't get stopped out, we'll keep going. So say we've got 1, 2, 3, the candle this would move here. If we ignore that one, so 1, 2, 3, it'll be there. 1, 2, 3, it'll be here. You know, just ignore that wick for the minute for this video, but that's how I'll be moving. So the highest of the recent 3 candles. Now I know I spoke about invalidation when the trade price hits the 21 EMA. It's not an exit strategy if you're already in a trade, so don't worry about that. you only do that when you're entering a trade. That's the only time when you focus on it. So because when you do get trades like this, you do have more entries. For example, you could have entered here on this trigger bar. Obviously that's a massive wick, that's a massive candle, so the stop loss would be huge, but you can still enter, the strategy still works for it. We could have entered here, we could have entered there, we could have entered here, so we could add multiple trades in this one trade, which is, so essentially you can just trade that one pair and then ride it out for the whole week if you wanted to. But yeah, this is how I passed the FTMO, just purely by using this strategy. And exactly the same process for the buy. Essentially what you wait for is first you look on the daily to get a clear fanning, look on the 4 hourly, make sure you still get this still buy entry, buy signal, and then you look for the entry on the hourly. You wait for your trigger bar, so one is here, our stop loss is going to be just below, our entry point is going to be at the highest of the previous 5 candles, so 1, 2, 3, 4, 5, highest is there, so 3 pips above. Let it play out, and then you can try your stop loss. So say you've got the 3 hourly candle, so on this candle we won't move anywhere, so 1, 2, 3, on this candle we'll move to here. So this one you will actually get a good one. 1, 2, 3, you will move to here. 1, 2, 3, you'll move to there, and so on. You'll keep going. Alternatively, you can close it on a crossover. So it's very simple. There's like no structure really involved, as in support and resistance. It's not something I focused on when doing it. I purely focused on riding the trends out, because if you're going off the daily trends, you've got a high probability. So don't solely focus on the hourly for your entries. Always look for confirmation from the daily and from the 4 hourly. So what I would suggest is give it a go in a demo, see how it goes for you, and message us at any point if you need any help with this strategy, because at the end of the day we want you guys to be as profitable as possible, and hopefully we can get you funded from this strategy or any strategies that we teach. But yeah, this is the one that I used. It was very easy, very simple, and yeah, helped me pass in the minimum days required. So purely because the risk to reward is just so high, you can get one good trade and pass. But yeah, give it a go, see what you think, and yeah, good luck.